In this video lesson, I will show you what is a risk-reward ratio calculator. So you can see what is the risk-reward ratio when you have the entry price, stop-loss price and take-profit price on your trading chart, and what will be the break-even rate for that example. You can see that I have here a presentation on the left side, here risk-reward ratio, and below that you will see also a calculator that you will find on the link below in the description below the video. And on the right side you can see the MT5 trading chart with Euro USD as an example, which I will show you so you can see how this works with a real example. Let me start with the presentation. So I will share with you a few informations that are very important for this topic. So the risk-reward calculator is the calculator that gives you the ratio between the stop-loss and take-profit level. It tells you how much the profit target is larger than the stop-loss target compared to each other. And that is a very important thing to know. Because also the risk-reward calculator requires three pieces of information from you. That is the entry price, where you will open the trade. Then it will be a stop-loss, that this trade will be closed, and the take profit is the trade level where the entry will close with profit. So these three informations the calculator uses to make the calculation for the price difference. And the first price difference is between the entry price and the stop loss, and the second one is between the entry price and take profit. This is one part of the formula, and this calculator will calculate risk-reward ratio for two different scenarios. So the first one is when you open the sell order, and that means the stop loss is above the entry price, and the second one is when the sell stop is below the entry price. So the sell order is when the take profit level is below the entry price and the stop loss is above the entry price. And the buy order is when the take profit level is above the entry price and the stop loss is below the entry price. So these are two cases for the risk reward calculator, because there will be different calculations in that. Then you have for a long positions, and that is when you open a buy order. This is the formula, and for the short positions is the case when you open a sell order. So you will see that in the MT5 trading platform as an example. Here it is one example that I would like to show you. So when you have a risk reward of 1/3, and that means you will have a stop loss difference equal to 1 and the profit target will be equal to 3. Have in mind that 1 and 3 does not have to be 1 pip or $1. The idea is here that the stop loss difference will be at one level. Let's say stop loss is 10 pips. With 1/3 risk reward ratio, that means you will have take profit which will be 3 times more than the stop loss. So 3 multiplied with 10 pips equals to 30 pips. So if you have 10 pips as a stop loss, then you would need to have a take profit equals to 30 pips, which is 1/3. Okay, so the goal is to have a profit 3 times higher than the stop loss is. Here is an example. If you define the entry price as 1.1234 and the stop loss price is 1.1220, you can see that the difference between the entry price and the stop loss is equal to 14 pips. So if you have 1/3 ratio, which means your take profit level should be 3 times more than the stop loss, in this case the take profit should be 3 multiplied with 14 pips, which would be 42 pips. And that would be equal that the take profit should be 1.1276. Now you have these three levels calculated with 1/3 risk reward ratio, and you can see them here. So if you open this order in your trading platform, this means that you would have a trade that has a risk reward 1/3, and that means calculated with the pips. Let me show you now, just a minute, the example on the trading platform. Okay, here you have the risk reward calculator where it requires three levels, and that means you need to enter the entry price, stop loss price and take profit, and then click calculate to get the risk to reward ratio and also the break-even rate. The break-even rate is the rate that tells you how much in percentage of all trades needs to be profitable so you will be a break-even. Let's take one example where we have the entry price at 1.0731, the stop loss would be at 1.0737 and the take profit would be 1.0713. This means it is a sell order because the price is expected to be on the lower level than it is currently. So we enter here the entry price, which is 1.07310. We put a stop loss 1.0737 and the take profit 1.07132. Click calculate and we get that the risk to reward ratio is 1 against 2.97. And that means that we are expecting that the take profit would be around 3 times higher than the stop loss price is. If you take a calculation between the entry price and the stop loss, this is around from 31 to 37 price, it is 6 pips, and from 31 to 13, that is around, it is 18 pips, right? So we have difference 6 pips, and we have difference around 18 pips, that is close to 3 times the difference, basically, because if you have 18 divided with the 6, you get around the number 3. And then you have a break-even rate that tells you that around 25% of all trades that you open should be profitable just to be break-even. Okay, now let's check another example. If you change this into buy mode, and that means this is a sell order currently, but if you want to change this one like this, just a minute, remove this one, the stop loss should be below and we put take profit above, which means you would open a buy order, that means the price will go up. So in this case the stop loss is below the entry price and the take profit is above. If we change this one, that stop loss should be below 1.07248 and take profit would be 1.07535. Click calculate and this is what you get. You get that the risk to reward ratio is 1 against 3.63, and that means the stop loss and take profit have difference 3.6 times more. So if we take a closer look to this one, you have the entry price 3.1 and you have 2.4, which is a difference around 7 pips. But you have also the entry price 3.1 and the take profit at 53. That means it is around 18 pips. So you have difference here, 18 pips to take profit and you have around 7 pips to get to the stop loss. So that is close to 3.63 times the difference between the stop loss and take profit levels. So if you have also these values, you can see that the break-even win rate is 21.60, and that means if you open 10 orders with these stop loss and take profit levels and this ratio, this means that 21 out of these 10 trades should be profitable just to be break even, and that means around we can make a calculation that 3 out of 10 should be profitable, so you would be a break even. Okay, so this is how you can use this risk reward calculator, so you can get what is the ratio between the risk and the reward, and that means between the stop loss and the take profit. The goal is always to have at least 1 against 2. That means that for $1 that you lose on the trade, you should target to have $2 of profit. So if you put that, for example, let's say that we have entry price at 10 and we have a stop loss put it at 8, and we have, for example, put here a take profit at 14. So if we click this one to calculate, we get the ratio is 1 against 2, and that means that 33.33, and that means around 4 trades out of 10 should be profitable just to be break even. okay? And you have a risk to reward ratio that is 1:2, and that means for $1, in this case, if these are the dollars, this is a $2 difference. And we have here $4 difference between the entry price and the take profit. So for $2 of stop loss, which means a loss on your trade, you are targeting $4 of profit on that trade. So if you have 3 trades and where the 2 trades are negative, you would have $4 of loss, because 2 times multiplied with $2 of loss, that is $4. But if you get the third trade positive, that means one trade with $4 of profit, it would mean that you would have been equal to $0 of profit and loss, because you have 2 trades, bad trades with $4 total loss. You have 1 trade of profit with $4 equals to 0 difference. So I hope this risk-reward ratio calculator helps you to understand and also helps you to define what is the risk-reward calculation. And you have a break-even rate, which is a great tool that gives you the amount of trades that needs to be profitable if you have several trades open. So it tells you how much of them of total trades should be positive just to be break-even. And this tool also can help you to define your trading strategy, especially about risk management on your trading, because it helps you to define what is the best risk-reward ratio depending on the trades, on the amount of trades that you would like to open. If you have any questions regarding this calculator, please leave a comment below. And if you like this video, click the like button and subscribe. See you next time and happy trading!